Hey traders, John Howell here, officialjohnhowell.com. In this video, we're going to talk about, show you a different, basically look at the Dow Jones Industrial Average chart and just see what's going on there. It's just a short video, just to give you an update of some things I'm noticing right now, which is actually quite interesting. Now, most of the time I don't look at indicators because we don't really need to look at indicators, okay? So that's most of the time I do that. Now, what I do say is that when we're looking at the actual chart itself, there's obviously some things that we can read internally of what's happening. Now, I don't know about you, but something smells fishy here when it comes to the market. So let me explain what I mean. We've been going up for quite some time here, okay? You can see here at the bottom of 2009, we had a massive, look at all these volumes here, all right? Massive amount of volume, and then the market took off. And that's one of the best things I actually learned from my mentor, is that if you can get in when there's a big spike in volume, or when there's a lots and lots of volume happening, it generally means there's likely to be a turnaround sometime soon. Makes sense? As you can see, it's a lot of turnaround. But one thing I am noticing is this, you've probably noticed this. We've been going up for quite some time, right? Look at that big bull run through there. But look at the actual volume in itself. Look how much it's tapering down through there. You see that? That's actually been tapering down. Yeah, that's actually been tapering down and quite a lot. You can see back in 2009, and as the years are going on, the volume is getting weaker and weaker and weaker. So over here in 2009, 2010, we're probably averaging, what was the average? This is the average here. So we're probably averaging around about 1.5 billion per day, around about there. Okay, around about 1.5 billion. Now, if you look at the volume here, if I just remove this, and let's just squeeze up a bit more. So as you can see over here, right, so look at that there, for about 1.5 billion back in 2009, 2010 to, so 2009 to 2010, 1.5 billion, and then from 2010 to 2011 we had 1.1 billion, and then on average 2011, 2012 826.2 million, and 2012 2013 we had on average 783.1 million per day. Then we look at the average, average between sort of middle of, again this is the average, around about 650 million, and right now we're averaging around about 500 and something million dollars. You can see right here, yeah, about 500, maybe 530 million dollars. Now if this was a true big bull market, okay, if this was a true big bull market, then how come the volume's getting weaker and weaker and weaker? Shouldn't we be getting some, at least through these periods through here, right? Like, yes, we got a big volume spike through here, which is good, all right, and that picked it back up again, which is good. But at least these periods through here, you know what I'm saying? Like this period through here, if I just, let me just do like a vertical line. That period through there, that period through there, and that period through there, at least we should at least see some volume spikes, you know what I'm saying? At least, because this is where the market sort of pulls back and then it picks back up again, right? And then pulls back and picks back up again. Now, yes, we're looking at a weekly chart, but I'm looking at the bigger picture here, okay? So we're not getting any decent spikes on on ICE, okay? So once again, I know I said before per day, but what we're looking at here is we're looking at we're looking at a chart that is, we're looking at a weekly chart. So, okay, what is happening on the overall big picture? And that's something I just noticed on the weekly chart. And that's actually a telltale sign, like, for a market to keep going up, it needs volume, it needs buying activity. Makes sense? And because we're not getting the buying activity right now, this is actually getting weaker and weaker. Yes, we're going up, but we're getting weaker and weaker and weaker. Makes sense? This tells me that there's a lot of people on the sidelines right now not doing anything about the market because they're very fearful and very scared. Again, I'm not making the numbers up. I'm just looking at the volume. If in 2009, 2010 we had on average around about 1.5 billion dollars being traded on average, okay, on average, you can see around about there, okay. And then we started to taper down through here, and we're getting weaker and weaker and weaker. In a big bull market, we need volume to keep that up. Now this market's continue to rise. All right, I'm not saying it's not, but yes, it's continue to rise. But hey, isn't that something just to keep an eye for? Now, I'm not saying start to go short this market, but what I am saying, and without a doubt, and this is just a fundamental thing about the market, for this market to keep going up, if we're in a true big bull, honest bull market, then the overall big picture, we should be at least seeing some good buying activity. Once again, like around these periods through here, right, around these periods through there, what we should be getting is we should be getting somewhere around about these periods through here. Make sense? We should be getting big buying activity. We're not, okay? So this is just a video to alert you. So hang on a minute. I'm not saying this market's going to crash it, because we're always going to be focused on what the actual market's doing, okay? Which is looking at the peaks and troughs, strengths and moves and all that sort of stuff I teach. But I'm just sharing this with you because, hang on a minute, there's something internally not right about this market, okay? Now, yes, we have been dropping, and yes, it's been continuing to rise, and yes, it can still continue to rise. But this market cannot sustain this, okay? And this is just showing that on average, we're tapering down worse and worse and worse, okay? So this is based on, this average here is based on obviously a 50-week moving average, okay? So it's based on 50 weeks, okay? So that's roughly it's roughly per year, you know what I mean? So as the years are going on, you can see the average, which is basically 50 weeks, which is per year. As you can see, as the years have gone on, that the volume has gotten worse. Now, here's the interesting thing. Look at this here. Look at the volume through here, okay? Between 2005 to 2009, look how the consistent volume all through there was about 1.5 billion all the way consistent through there, right? And then we had this big drop through here, and then we had this big volume spike through here, okay? And then after that, yes, we've been going up and we've been filtering through, but you look at that average through there, okay? And then, but then if you look at the average through here, look at that. You know what I mean? Like, it's just actually getting, it's so much lower than that. Isn't that suspicious? Like, isn't that saying, hang on a minute, this is actually not right? You know what I mean? Like, again, if you look at this big bull market over here, from here to here, from 2005 to 2007, you know, you saw good, consistent volume the whole time. You know what I mean? And it wasn't tapering off. It was sort of consistent, which is what you expect in an actual drop up, in a rising market. But looking at this market right now, where the actual market is actually, where the volume is once again, where the volume is actually tapering off through here, okay, where it's actually tapering off, that's actually telling something. Anyway, guys, this is just something that I want to alert you of and just get you thinking about what the market's doing. If you are a long-term buy and hold, I want you to seriously consider what I'm actually talking about here, okay? I'm not telling you to buy, I'm not telling you to sell, I'm not telling you anything. I'm just saying, if you're a long-term buy and hold, maybe in your retirement account or something like that, then this is something you need to keep an eye out for, because this market cannot sustain this activity on the upward side when we haven't got any buying activity here through here, okay? Buying activity is simply shown from the volume itself. Anyway, guys, I hope you liked this video. Come on down to officialjohnhowell.com for more information. And remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.